What is going on, ladies and gentlemen? It is that time for a Sofi stock update. Now we have a very important catalyst that is coming out this week that you may or may not have heard about. I'm just going to give you guys the preview here. It is Fed Jerome Powell yet again. And this is really the last moment that Fed Powell will have before that May 4th meeting to basically confirm to the markets that we are going to get a 0.5% rate hike. And why I say this is his last time, well, it's pretty much the last time that he is going to be speaking before that meeting. And as you guys do know, over the past 2 years, Fed Jerome Powell has made it very clear to give us very strong hints, or at least come out and say exactly what they plan to do in the future, say at their next meetings. That's why we knew what to expect last meeting to get a 0.25% rate hike. That's exactly what happened. The markets were pretty chill about that, right? The balance sheet runoff, that's going to be a different scenario. And that's why it's going to be so important for SoFi stock this week, and potentially could give us a big bounce, or it could give us another big drop. And I know that's probably not what you guys want to hear, but it's going to make those leap options very, very cheap for those of us that are involved in SoFi stock for the long term. Nonetheless, there is a lot to talk about, so let's get to it. Hit the like button, subscribe to the channel if you have not already. Let's get this channel to 1,000 subscribers. Thank you guys for tuning in here every single day. But first, we have a quick message. This is your nutritional daily values for success in the stock market and in your personal lives, or wherever you strive to be successful. You have 100% hustle, motivation, belief, discipline, focus, flexibility, failure, risks, persistence, and patience. Make sure you guys have all of that the second you step into the stock market. Now, without any further ado, let's dive into this information. All right, so let's get straight into this video. SoFi stock is down about 1.41% at the time of recording this video. Now, the topic of this video, it does not matter what time of the day it usually is. Usually we do make these videos closer to the end of market hours, or even in after hours typically is when I start filming these videos. But for today's video, it does not matter, and I want to get you guys this information as soon as possible. So the main catalyst for this week is not only just the earnings like Netflix Tuesday, Tesla Wednesday, Snapchat on Thursday. Those are going to be the three biggest earnings, but you do also have Fed Jerome Powell that does come out and speak. Like I just said, that is going to be very, very important because the Fed has made it a point to be very transparent with the markets. Now, if the Fed is going to do a 0.5% rate hike, well, the only real chance they have to do that and be transparent with us is coming here on Thursday. And you do see you have Fed Chair Powell that speaks. He speaks at about 11 in the morning, I do believe. And that is expected to be a high volatility catalyst event. And it's really going to dictate how the markets do trade. If Fed Jerome Powell comes out and starts to talk more aggressively, saying that things are not looking good, we have to be even more aggressive, we're going to do a 0.5% rate hike, that's really going to confirm really the market's worst fears of a Fed induced recession. And that's going to come on Thursday, and that is going to be one of the largest single market driving catalysts that we will see. That is on Thursday at about 11 a.m. just so you guys are 100% clear. So make sure if you're in any trades to be very mindful on Thursday. It's gonna get a little bit crazy out there. If you guys hear the truck outside, I don't know what is actually going on with that. It might be a dumpster or something, but nonetheless, just don't mind that if you guys hear that in the camera. Not sure if you guys will or not, but I definitely hear it. Now, for May, the May 4th Fed meeting, that is 2 weeks, 2 days, 14 hours, and 23 minutes away. You're looking at about 90.4% chance of getting that 0.5% rate hike. And almost every other one of these Fed meetings, you're getting that same percentage probability of about 90 to 95% of that 0.5% rate hike, even all the way out to February 1st. That's when the probability for a 0.5% rate hike actually goes away. The February 1st Fed meeting, you're only expected to get that 0.25% rate hike. So that means a 1, 2, 3, 4, 5. The next 6 meetings, you're expecting a 0.5% rate hike every single time. So what is that saying? 3%, 3.2%, 3.25% federal funds rate by the end of the year is what the markets are pricing in. Now, if the Fed comes out and gives us a slightly different take saying, hey, inflation wasn't as bad as it as we expected. Maybe it's only in energy or food, and maybe we should just hold off going super aggressive on raising rates. That's going to be a bullish thing. If the Fed just does not say anything about a 0.5% rate hike, that will be seen as bullish. And I want you guys to keep that in mind. It doesn't really matter how SoFi stock trades more or less. The reason SoFi is going down is not because the business has been underperforming. The reason SoFi has been going down is simply due to the fact of when the Fed raises rates and drives rates up, it creates less demand in the overall stock market. And obviously, in the economy, I should say, it drives down share prices. And that's what's happening right now because the stock market is forward looking. So if we expect interest rates to go to 3.25% by the end of the year, we expect the 10-year treasury bond to continue to climb on this parabolic move that we have been seeing. This thing looks like a damn momentum stock. Then that's going to mean higher interest rates. That's going to mean a Fed reduced in session more than likely. And that means to sell stocks now before that actually happens. So any U-turn in Fed policy or a change in direction will be seen as a very positive thing overall. And that's exactly kind of what I expect for this Thursday. I don't really think Fed Jerome Powell wants to do that 0.5% rate hike. They have the markets prepared for it, so it's not going to be a huge deal. But I don't really think it's going to happen considering we did see inflation and really the core inflation actually tick down. That is inflation excluding food and energy. So, you know, the longer the war in Russia and Ukraine does go, the higher probability chance you do have to see more continuous 50 basis point rate hikes. So we'll see. The markets don't care about those rate hikes as much. They really care about the balance sheet runoff and how the Fed is going to reduce the balance sheet, but also at the same time, the probability for a recession. That is very important for the markets. Now let's take a look at the Ortex data and the max pain for SoFi stock, and then we will look at the technical analysis where we currently sit. I believe we are at an all-time low for SoFi stock, and I'm going to go ahead and buy some here for you guys. It's only going to be my typical, 25 shares or so. That's what I like to do on a weekly basis, just to average down on that position. But nonetheless, the short interest of free float is sitting at 19.61%. So if we do see a reversal in Fed policy, even a change of tone towards their interest rate policies, or maybe reducing the balance sheet, will cause these kind of stocks like SoFi that have been shorted into the ground to really rally back. And at this stage, you are seeing a lot of economists actually revising to the upside, becoming more bullish on SoFi stock. But like I said, the market environment right now is not going to favor a stock like SoFi. So that's pretty straightforward. You're looking at about 141.68 million shares that are sold short. Cost bar max of 2.73%. Utilization of 100% and days cover sitting at 3.10. So it's pretty hard to actually lend out stock. Now people say, if utilization's at 100%, how is there still shorting the stock? And it comes down to the simple fact of there will always be shares somewhere available to lend out for a short that does want to pay the cost to borrow price. And I don't necessarily believe these cost to borrow prices for SoFi stock or just in general on Ortex. I think if you wanted to short SoFi at this stage, you're going to charge a lot more than, 2-3% to do that. You can't even get a loan for 2 to 3% right now. That's pretty much where the 10-year treasury bond is trading at, actually under that. So nobody would lend out their stock for less than you can get paid for a 10-year treasury government bond. So I think the cost of borrow rate is actually much higher, and I think that could push us closer to a short squeeze if the Fed does change courses, or at least give us a decent size move to the upside. Now you are seeing some option activity for the day, not as much. Some longer dated puts, like the $5 2023 puts coming in, $56,000 order right there, $39,000 order right there, $36,000 order right there. And then you are looking at some January 20th, 2023 $10 calls. So you're looking at some longer dated option activity today at about $30,000 for that one, a $5 2023 call for $84,000. So I think there's some hedging going on here, and overall doesn't tell us a whole lot, but you are seeing a lot of those longer dated option activities coming through, like January 19th, 2024, $5 call for $71,000 right there. But there's not a huge flood to either buy or sell SoFi stock right now. You've ran out of sellers in the stock, I believe, at this point. A lot of this actual negative sentiment and downward pressure is due to the shorts shorting the stock. There's simply not enough buyers to offset that. Now, as far as the max pain is concerned for good old SoFi Technologies, let's go ahead and pull it up. SoFi, so the max pain is $8 per share by the end of this week. Now, where we end by the week is going to be very dependent on, one, the Fed, specifically for SoFi. Like I say all the time, Fed and fintech go hand in hand. When you hear Fed, think about fintech. When you hear fintech, think about how it will trade around the Fed. They're pretty much hand in hand. But we also do have earnings. We have Netflix, IBM on Tuesday. We have Wednesday for Tesla. And then on Thursday, we do have Snapchat. Nothing that really is directly related to SoFi. But next week, not this week, but the next week after, you do have PayPal, which is on April 27th. And depending how PayPal's earnings go, that could definitely affect SoFi by, what's PayPal saying as far as transaction volumes? How much money are they making? That's directly related to SoFi in that aspect. SoFi's earnings are on May 10th, so that could give us a little bit of a glimpse into what to expect for SoFi earnings. Overall, I do think their earnings are going to be good like they usually are, but if they are not, that could also be another reason to buy the dip at a lower price. But overall, when you think about it, SoFi has very low expectations right now. Nobody expects a whole lot out of SoFi, so as long as they don't massively disappoint, earnings should actually be very, very bullish. So that's basically that. As far as the technical analysis is concerned for SoFi stock, and let's pull up the daily candlestick chart, you could see we did hit that all-time low today at $6.98 per share. We did sharply bounce up from that bottom. We're sitting at $7.14 right now, down about 1.58%. The next key level is going to be $5 per share. We're pretty much firmly in the middle between $5 target on the low end and about that $10 target on obviously the higher end. And it really all comes down to the Fed. So I'm not going to sit here and try to make a direct conclusion where I think the stock will go, but overall I do expect a bounce, especially after you've seen just a violent sell-off here over the past 2 trading weeks or so. It has not been very friendly to SoFi, and SoFi is only down about 1.58% today. A lot of other stocks are down much more than that. You guys can see, look at my overall portfolio. Fubo down about 5%, Square 1.82%, DraftKings 3%, AMC 4%, Lucid down 3.5%, PayPal down 1.4%, Mullen down 13%. Like, SoFi is not doing all too bad relative to where they could be trading at right now. So I definitely think that is overall a good sign, showing a lot of strength in that regard. Now I will actually go out and I actually want to buy a leap option on this instead of buying the shares, get a little bit more leverage. And I don't recommend people trade options. Obviously, none of this is a recommendation, but I do like the prospects of SoFi options right now. I'll actually hold off on that. I'll see if I can get some better pricing here in a second, but I'll just go ahead and buy let's go ahead and buy 25 more shares, see what that does. Only $178. Jeez, I remember buying 25 shares. It would be like $300. So that's kind of crazy. Nonetheless, look to keep adding to my position. My current position, I'm down about 49.08%, average cost of $14 per share. Let's just go ahead and buy 50 more shares because that average is terrible. So let's do it up right there. Brings my average down to 13.48, a little bit better, especially if we do get a target range of about that $15 buyout if that does happen. Made some decent money selling those covered calls, up about 79% on those, made about almost $200 so far. Yeah, so that is basically that. Quick look back at the technicals. 50-day moving average sitting at $9.94 per share. That's going to be the resistance level. MACD, extremely bearish. RSI, also extremely bearish. And when people are so bearish on a stock, especially one that is growing with the rate that SoFi is growing at, usually you don't want to add to that bearish train. You'll usually see a reversal once sentiment becomes so bad for a stock or for the overall markets. Usually the time to take that opposite direction. So that is pretty much going to be all for that video. For this video, keep in mind what I said about the Fed on Thursday. It's going to be very, very important. Thank you guys for watching, and I will see you in the next one.